Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. If you're looking for investment opportunities, financial education, click subscribe. Join me and everyone else in the community to ride the commodity bull market higher. I'm going through the comment section. I don't think I've ever actually answered this question. This person's asking, solar window technology sold off a lot for some reason. And I didn't look at the company, I just looked at the chart. I was thinking of building a position, please take a look. And I've got the chart up here. You're gonna lose me for 2 seconds so you can take a look at the chart here. So we're talking technical analysis. Usually you get this big run up higher. This is the fifth wave, most likely. There's a first wave, a third wave, and a fifth wave. And then you go into this we'll call it corrective phase coming back. And this thing contracted down very nice right here. I'll be honest, I probably would have been sucked in at this update right here 3 days ago, and I probably would have got slaughtered. Just because, I mean, this thing looks pretty good coming down. It contracted down. So there must have been some news, something happened, I don't know what, an accident. But when you have a large sell-off like this, big sell-off, I'll come back in here. I don't chase that stuff. What I do is I wait for that contraction. So I would have been slaughtered here. This would have been, and I didn't buy into this. I don't really know this company, but the way it contracted down and then moved up, I would have been like, oh, it's game on. And then it's a statistical probability. Sometimes news, an event can happen. And if this is an event that's a short-term little blip, don't try to catch the falling knife. You're going to get cut like no other. Let it fall, let it come back. Look for your bullish candlesticks. A bullish engulfing. Here, you know what? I'll show you what those candlesticks are. So actually, let me see if I can find any. So this one right here, the top of my pointer right there, is a bullish engulfing. The candlestick body engulfs the little guy before it. This will be a down day. This will be a big up day. That's a bullish engulfing. A bullish piercing is when you have a down day, and then you've got a big up day where the stock opened lower and reversed higher, greater than 50% of the candle before it. That's a big bullish piercing. You can also have a hammer where you've got a down day, and then the stock trades throughout the day, reverses very hard, comes all the way up, and the opening and closing price are really small, which leaves a very big wick on the bottom. Those are reversal patterns for a daily candlestick. And what you want to do here is I don't try to chase these big moves lower. Most of the time, you get slaughtered. you try catching the falling knife and you get cut pretty bad. You get some pretty good losses. And I wait for a base or stability to launch from. And that's why we do all this technical analysis. That's why we chart all this stuff out. We're looking for large. The bigger the base, the bigger the chart pattern. If it's 10 years, that's a gigantic launching pad to launch from. And more than likely, you're not going to be wrong, because that's 10 years of a bunch of people interacting with each other, making buying and selling decisions that created this big chart pattern. It means that structurally, like the fundamentals underneath the chart are firming up and they're about to turn. And that is in agreement with all of the participants in the market making transactions. So when you start looking at these patterns, all it's basically a graph of the interactions that people have at certain prices. So if the higher you go on a chart, given there's some things that don't make sense, but the higher the price goes, usually you encounter more sellers. And what it takes to move a stock a ton is either you've got a bunch of short sellers shorting the stock that have to cover, which basically amplifies the buying pressure, or you have a bunch of momentum and people continue to pile in and they get the FOMO. FOMO being the fear of missing out. Now, I don't play, I've been in the market for a while. And the way I play things is I don't play, is it the meme stocks? I don't play any of those things. I don't play with Bitcoin. I don't play with the high volatility, can't really value it aspect. So what I do is I look at what I know and I say, I can value these things. These things are cheap. And if I have a known cheap asset, why would I go speculate on something that doesn't have any value, or the value of it is unknown? But if I have something over here that has known value, that is incredibly inexpensive, and I could get potential 10 to 50 times my money in, let's say, a 3 to 10 year period, why would I not take that? Why would I not buy physical precious metals if I know that they're undervalued in relationship to other assets? Why wouldn't I do that? Why would I go run and chase something that's gone up 5, 6, 7 times? Now, if it hasn't gone up 5, 6, 7 times, and the company like AMC or GME, and it has no value, why would you buy that then? How could you be in it before that move? There's nothing there of great value to buy. So you're either chasing or you're buying something that doesn't have any value. So logically, I can't buy it. It's not in my DNA. Maybe when I was way in the beginning, like when I was like maybe even before I started investing, like maybe 16 or 17 or 18 years old, maybe. But still, I don't know if I'd do it even then. I know people were trying to get me to buy a house in 2007 and 8 and 6 when I first started working. They're like, man, that's just going up. And I'm like, for some reason, this doesn't look right. I didn't know as much as I do now, but it just didn't feel right, and I didn't do it. Knowing what I know now, I would say even buying in 2021, let this forbearance moratoria thing come out, and if it doesn't really affect it, I'd still buy even at these prices, because what other option do you have? You're going to wait 8 or 10 years and the price go up? I think it's going to go up substantially, but you could have an event. The event is the moratoria ending, if it does end. And I mean, maybe we get a small dip, or maybe we get a small crash, and then I think it's just going to go up higher again right after it. Maybe it lasts 6 months to a year. I don't know. If the amounts that come on are accurate, I don't think it's going to do much of anything. But that's me. We'll have to see. We'll have to watch inventory. We'll have to see what happens. And that's what I look for. I use data. So all it is from technical analysis is buyers and sellers interacting with each other for certain prices. Never try catching falling knives. Never chase something that starts to go vertical. If you never chase the vertical moves and you never chase the moves that just dip like no other, I think you'll be okay. You can let this thing dip and kind of like base out a little bit. Maybe you go in, but the problem is I don't know the reasoning behind this, and I can't really. I have to know the reasoning, and even if you know the reasoning, usually it takes time for these things, the momentum to turn around, unless it's just a fluke, like something happened. I did buy Norelsk Nickel. Norelsk Nickel had an accident. This is a much larger company, though, and I know a lot more about Norelsk Nickel. But Norelsk Nickel had an accident right in here. It was breaking out right here. It had an accident, and it went all the way down to $27. And in the portfolio, I bought it at $30 and $27.50 or something like that, somewhere in here. And then it came back up, and now we're breaking. Basically, we're in new highs, and this thing's going to go higher. NILSY. Oh, gosh. Yeah, right in here. They had an accident right here. It came on down, and then it kind of bottomed. It shot back up, and I would have bought it like $27.50 right here, and 20 all through here. I would have been a buyer coming back up. And we just broke out to the upside, so Norelsk Nickel looks very good to continue higher. This is one of the higher returning, lower risk plays, I think. NILSY. They own copper, nickel, and PGMs. All the stuff that I really like. Just to give you an example, as an event happened. So structurally, this thing's going higher. Events, I don't worry about event-driven things. I don't worry about news. Structure, like if you look fundamentally over very long periods of time, if you're putting in a 10-year or 15-year chart pattern, COVID is like this little blip. I mean, it means nothing. And the fundamentals and structure, the way that I talk about it, means that it basically has to happen. It has to resolve upward the price because we don't have enough of it in society. And if you're below cost curves and you're kind of educated in that area, it's like free money. I mean, it's like literally someone handing you money. And if you know platinum's at $800 and it's below the cost curves and it's so cheap, it's like, why wouldn't you buy that? That's like a no insure bet at $800. Like, you load up. Why would you even mess with why would you mess with something else like an AMC or GameStop or any of those things if you have a no insure bet that has super low risk? I would hit that. I mean, if platinum was at $800 right now, I would be loading in. I bought as much as I could until I ran out of money. You know, it's not infinite. So, and then some of the other ones, when oil was down, I bought as much as I could. And then I bought as much as I could when uranium was down, and that's all you can do. You guys can hold cash. That is an option, 5, 10%, 20%. The way that I view things is my cash is my bullion, kind of. I own 33, well, it's not that high. It's maybe 25, 20%. My portfolio keeps going up so much that it's becoming less and less and less of my overall net worth. I only load up when things are really cheap. So I have not been buying as much physical precious metals as I have been buying some of the companies in uranium sector. And then I'm also looking at gold and silver still. I still think there's some really incredible opportunities in gold and silver. So I'm starting to look at some of those royalty companies of the smaller ones and just continuing to add in. If they're down and no one's looking at them, no one likes them, I'm going to continue to buy them. And Teuton Resources is one of them. I'm looking at these things from long-term holds. Nova Royalty in the copper nickel area, Ely Gold, Metalla Minerals, even a little bit of Sandstorm Gold. These things, they're down, and I still think that that people aren't really looking at them right now. And if the bonds look pretty good to go higher, gold looks like it's good to go higher. So I may add in a little bit just to beef up the portfolio before they take off. If you guys like this content, give me a thumbs up. If you guys have any other questions or comments, leave it below. And thank you for listening. This is Finding Value.